Hello options traders and stock traders. Actually, for this video, only stock traders. That's right, this video only applies to people who are placing limit orders on stocks. And I had an interesting email from one of the traders in this group saying, why did my limit order mysteriously change? I had an order to buy shares at 100, good till canceled. It's been sitting in here day after day, and then one day I got up and it's been magically changed to 99. What happened? Is there a glitch in the system? Did I get hacked? Not at all. It has to do with the way in the mechanics when a dividend is paid. So let's take a look at what's happening, how you can stop it, and most of all, why it's done. So we have to start with talking a little bit about limit orders, and I think most of you know that it's a type of order that guarantees the price but not the execution. If you're not familiar with the difference between market and limit orders, I do have videos in here on these topics. But if you place an order at a specific limit, it has to get filled for that limit or a more favorable price to you. So let's say that our stock is trading for $102 and you think, well, this seems a little high to me. I think it's going to fall a little bit. I don't want to pay 102, but I'm willing to buy if I can get it for, let's say, 100. So you place an order to buy 100 shares at a limit of 100. So it's this limit right here that becomes our line in the sand. The order cannot be filled for anything higher, but certainly for prices less. And you place this good till canceled, which means that it just keeps renewing itself day after day if it's not filled. And then one day you look at your platform and it's been changed from 100 to 99. Well, what happened? Well, it's because of stock dividends, and stock prices are reduced by the dividend amount. So let's say that our $100 stock here pays a $1 dividend. And what that means is on the date that it's officially designated is what's called the X date or the X dividend date. And on that date, it will trade for $99, just the previous stock price minus the dollar dividend. So the X date just means exactly that. It's the date that the stock trades without the dividend. So sure, you could buy it right now for $99, but you're not going to receive the $1 dividend. On the other hand, if you bought it the day before the X date, you would have paid the $100, would have paid more for it, but you also would have received the dividend. Now, the reason that this is done is that the company is no longer in possession of that cash. If the market valued the stock at $100 yesterday and the company is now letting go of $1 worth of cash per share, then mathematically it should be worth $99. So that's why they reduce that stock price by the amount of the dividend on the X date. And because of this, certain limit orders will get reduced. So there's 4 basic types of limit orders. So let's say that our bid was $101.99 and the asking price is $102. And maybe you decide to place an order below the current market with a buy limit at 100. Notice that this is to the left of our bid and ask prices. It's at a lower price. Well, you could also do the same thing with a sell stop. If you had 100 shares already, let's say, and you wanted to place a stop order, perhaps maybe you would also put that down at 100. But the point is that buy limits and sell stops are generally placed at limits below the current prices. Well, over on the right-hand side, we have just the opposite. You'll have sell limits. Maybe you've got 100 shares in your account and you say, well, I don't want to sell it right now for $101.99, but I'll let them go at 103. That's a sell limit. It can only get filled for 103 or higher. But over on this side of the board, you could also have buy stops. Perhaps you're short shares of stock, and as a level of protection, you say, I want to get stopped out if it hits 103 or higher. So notice these 4 types of limit orders right here. We've got the buy limits and sell stops on the left. We have sell limits and buy stops on the right. It's only these 2 on the left that are going to get reduced by the dividend amount. So if our $100 stock here pays a $1 dividend on the X date, any open buy limits or open sell stops at 100 would automatically get reduced to 99. On the other hand, if you had open sell limits or buy stops, they don't get touched. They remain the same. Okay, so remember when you're looking at these orders, what gets reduced? It is the open buy limits and sell stops that are reduced by the dividend amount. And back when I was taking the Series 7, they would come up with kind of some creative ways to remember this, and they came up with an acronym of BLISS, buy limits, sell stops. On the other hand, the open sell limits and buy stops remain unchanged. They are not touched. And that's because they're not going to get artificially triggered by the drop in price. Because remember, the sell limits and buy stops are to the high side. So the acronym that they used here was SLOBs, sell limits and buy stops. So kind of another funny way to remember it is that once a slob, always a slob. In other words, the sell limits and buy stops are never changed. Well, is there a way to not have your order reduced? So the answer is yes. If you don't want your buy limit or sell stop order reduced, you need to use what is called a DNR, or a do not reduce qualifier. And most brokerage platforms will have these. It will only allow it for stocks, not for options. And you just check off the little box. If they don't have it, you might have to actually call the broker. Now also, as a side note, these will not apply to options. However, the option prices will theoretically adjust because these are known dividends by the market, and those prices will adjust automatically. So I hope this helps you to understand some of the mysteries that many of you might have experienced when using stock limit orders. And depending on what you're trying to do, it might kind of wreak havoc on a strategy if you're not aware of the mechanics when a dividend is paid. If you'd like to learn more about the art and science of options trading, please check out the Alpha Trader course and strategy lab at optionsatoz.com. Also, please join us on the Facebook trading group, Options A to Z, and you can find a link in the description below.